Trading and investing in stocks is hard, as we've agreed. Most top by greed and sells bottom fear, blah, blah, blah. Penny stocks is even harder. Yeah. So just talk a bit about that.
To me, it's always very interesting that the tipsters always play around in the small cap world. Why do they do that? Why do they issue tips only in small cap? I would suggest it's because it's easy to manipulate the share price of a very illiquid small cap company. First of all, they have very wide bid-offer spreads. So if you calculate your performance based on the mid price rather than the price that ordinary investors have to actually pay, straight away your performance theoretically looks a lot better than a real investor. The next thing is once a small cap stock gets recommended, the share prices tend to move up a couple of percent, 3, 4, 5% on no volume at all. So straight away a tipster can recommend a stock, it can move at a mid price, but a real investor won't be able to buy it until 10% higher. Could be. And so I would be very, very wary of playing in the small cap space. Having said that, there are some gems to be found. And actually, in terms of social responsibility, what more benefit can you do to help finance a small company with a brilliant idea? I think actually, channeling capital to small companies that could grow really fast is a really important part. I don't think the UK does it anywhere near as well, for example, as the States. But I think one of the problems is the small cap space is a bit spivvy because of these tipsters and because of the way you can manipulate illiquid share prices. And that to me is a real shame, because I think it's one of the reasons that really interesting, fast-growing companies don't get access to the capital they should do, because it is tainted.
Transaction costs and taxes is why, as a...
Okay, we'll go back to the tipsters.
Not often cited, bloody always cited, but go on.
So again, going back to tipsters, when they advertise 20% performance on their stock tips. And yet I always find it very interesting that they then move, because clearly the way to make money is to manage other people's money very successfully. There's a reason why hedge fund managers, Soros, Buffett are some of the richest people in the world. It's because if you really can create the elusive alpha that nobody really can, then you can make an absolute killing investing other people's money. So if all these tipsters that advertise 20% or whatever it is, 30% or 40% or 50% a year, were really that good at tipping stocks and picking stocks, why don't they manage their own money? Why don't they set up their own fund? Or what is interesting is look at the few that have set up their own fund. And the difference between their stock tipping versus fund performance is vast. And that to me highlights the problems and the costs of trading and implementing somebody's transaction. So next time you look at a stock tip, not stock tipster, have a look. Have they ever created a fund and how's it performed relative to their tipster? Because if you want to make money out of them, you actually have to buy and sell what they're recommending, and that comes with transaction costs.